retail inflation witnessed sharp slowdown in June, which came in at 1.54%. Now, the food inflation contracted for the second consecutive time. On the other hand, though, the main industrial output came in at 1.7%. Let's understand exactly what those macroeconomic numbers mean and what's the relevance for our economy. Latha Venkatesh is here with the detailed analysis of these numbers. Latha, is rate cut on the anvil now?
So it would seem. I mean, look at the fall in prices. It's not fall, it's almost a tumbling in prices. When did we last hear of a 1.5% inflation? Last month, when it came in at 2.18%, we were shocked. 1.5 is lower than the 1.7 poll that we got, and of course a historic low. I guess twice or thrice before we have seen such pathetic numbers. Prices have tumbled across all food articles. Food prices have contracted. It's not a slowdown in price rise. It is actual fall of 2% in food prices year on year. Vegetable prices have fallen by 22%. Vegetable prices by 16.5%. Pulses by 22% year on year. But what RBI watches very closely, or rather the Monetary Policy Committee, is the core inflation, the services inflation, that which can't be imported. You know, the cost of domestic help, drivers, health services, teachers, tuitions, education services. Core inflation has fallen to 3.8% compared to 4.2% in May. That's, just over the month 40 basis. And from year ago levels, it was 4.8. 4.7%. Seminal fall, the Reserve Bank normally likes to keep 1.75 percentage point difference between inflation level and the interest rate. The year-end inflation is expected to be about 4%. Currently, the repo rate is at 6.25%. So there is, much more than 175 basis real return. Chances are, economists expect on August 2nd, there should be a rate cut when the MPC meets. Just a word on growth, the industrial output numbers not looking very exciting at all at 1.7%. Even the previous number, that is for the month of April, has been revised lower to 2.8 from 3.1. Pathetic performance by manufacturing, 1.2%. Capital goods is a contraction of 3% or 4%. Intermediate goods has remained flat. Consumer durables, contraction of about 5%. Only two things grew well: electricity about 8% and consumer non-durables, that is, food, FMCG type of products, that has grown very well at about 8%. But overall, not a very good growth picture.
The number is, of course, 1.54% and is at a kind of almost historic low and reflects the firm and ongoing consolidation of macroeconomic stability. Clearly, this low number and what it implies about underlying price pressures, as well as the latest data on the IIP, is something that I am sure all policymakers will reflect upon very, very carefully.